You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns to show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about into this video is CAD JPY. Now, why do I want to speak about CAD JPY? Because we have a quite interesting situation at the moment on it for a nice trading opportunity. So as usual, I will be keeping this analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds, so the non-commercials in the market are doing. And we will be checking the data both for the CAD and also for the JPY. And by the end of the video, by using a combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup for this pair. Now, starting here from the monthly time frame, what do we have? Now, on the monthly, clearly we have an overextended market. In fact, we have a market which has created this extremely strong impulse to the upside. And after an impulse like this, you do expect the market to provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this low to this high. And if we take our Fibonacci from the low to the high, we can see that the 0.32 is currently lining up exactly at this area, which is also a quite strong confluence of support zone. In fact, it was acting as resistance here, preceding all this rejection to the downside. And currently, since the market has broken above it, is acting as support. So if we will see the market provide a correction to this area, we can then expect the market to provide a rejection to the upside and potentially the creation of a higher high. We can also notice one last thing. We can notice that at the moment, the market has this shape here with the current monthly candle that we're trading in. And if in 2 days and 12 hours, this monthly candle will actually close with this shape, so a very long wick and a red body, we can then expect the next candle to fill in this wick and potentially provide a rejection to the downside, which is a pattern which the market loves to provide over and over again. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that at the moment we have a left shoulder here, head here, and right shoulder here. Basically, we're testing a very strong resistance zone with a bearish pattern, which could easily make the market provide a rejection to the downside and create the retracement that we already want to see from a monthly perspective. So at the moment, monthly and weekly are both combining for a nice potential move lower here for CAD JPY. Just a quick reminder, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now here on the daily, we can see that at the moment, the market has just provided this overextended W formation. Now, generally speaking, after the creation of an overextended W formation, what you want to see is the market provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this low to this high. So if we take our Fibonacci from the low to the high of this impulse, we can see that we have a first downside target at this area. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last reports on the CAD, hedge funds have been increasing their long positions from 46K to 53K, with 5.7K longs added with the last report. Short positions have been decreased from 45K to 40K, with a 5K shorts getting closed with the last report. So the CAD actually in the short term has been getting stronger, and we can see clearly this reflected in the price action with this move to the upside. And if we go and see what we have on the JPY from an institutional perspective, we can see how we went from 50k to minus 59k net positions, meaning that we went from having more longs than shorts from an institutional perspective to having more shorts than longs. So clearly the JPY is getting weaker, and in fact, CAD JPY has been creating the continuation to the upside. So how we can be approaching this potential shorting opportunity here on CAD JPY with students. Now, why am I saying shorting opportunity? Because we have already seen that we have the W formation, but even though here we have seen a weak JPY and a strong CAD, the market can easily first provide a correction and then the continuation to the upside, because no market can just go straight up. All markets will need a correction. The simple thing is that since we know now that hedge funds are adding longs on the CAD and closing a long and opening shorts on the JPY, as we can see here, we will not be looking for a long-term move to the downside, but simply for a correction of the W formation before the continuation to the upside, possible continuation to the upside. So how we will be approaching this short-term shorting opportunity here on CAD JPY. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a 4-hour and lower bullish market as we have right now to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding CAD JPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. If you enjoyed the video, make sure that you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a Q&A session every day in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.